And global stock markets have been caught in the grip of contagion fears today morning, sparked by troubles at China Evergrande. As growing risks and the property giant, it could default on its massive debt, prompted investors to flee riskier assets. Selling pressure persisted in early trade in Asia ahead of major test for Evergrande this week. It's due to pay $83.5 million in interest linked to its March 22 bond this Thursday. Evergrande has another $47.5 million payment due to September 19 for March 2024. Both bonds would default if Evergrande fails to settle interest within 30 days of scheduled payment dates. Japan's Nikkei was down 2%, resuming trade after a market holiday yesterday, while MSCI's Buddhist Index of Asia Pacific shares outside Japan lost 0.2% too. MSCI's ACWI shed 0.13%, a day after gauge of world's 50 stock markets lost 1.63%, its biggest decline in 2 months, and leaving it teetering at its lowest level in 2 months. Markets in mainland China and Taiwan are still closed for a public holiday for Mid-Autumn Festival, while Korean markets remain shut through Wednesday. On Wall Street, S&P 500 shed 1.7%, biggest drop in 4 months. Nasdaq Golden Dragon China Index of US-listed Chinese shares tumbled 5.4% to edge near 15-month low last month. Shares in Evergrande, which has been scrambling to raise funds to pay its many lenders, suppliers and investors, sank 10.2% yesterday. Regulators have warned its $305 billion of liabilities could spark broader risks to China's financial system if its debts are not stabilized. Investors also fear troubles at China's property sector, one of key engines of country's stellar economic growth over decades, could have ripple effects across global economy.
If they totally just let accordingly hands off, that means they allow the bonds to actually default, that could actually lead to a social problem. Because don't forget, over here is that they have this Evergrande itself also sold numerous amount of wealth management products to the retail investors, which at the end of the day, I do not think the Chinese authority want to have a kind of a scale of social unrest that's happening in the Chinese economy right now. Given that we are still facing this kind of soft demand from this pandemic crisis that is not yet over. So I think it's more like quiet rescue, because they also do not want to explicitly say, hey, I'm here to inject X amount of billions into your books to actually rescue you, because they do not want to actually create another moral hazard to the market, saying that, hey, go on, continue your business as usual, property development. At the end of the day, we will still rescue you, because they do not want to actually paint this picture to send a signal to the property developer as well as to the markets down the road. Yeah.
In the currency market, China's yuan weakened to $6.48. Investors are looking for tapering timeline on its bond purchases, as well as board members' long-term rates and economic projections. This week, it will see policy decisions from many other central banks spanning Brazil, Britain, Hungary, Indonesia, Japan, Norway, the Philippines, South Africa, Sweden, Switzerland, Taiwan and Turkey. WION now available in your country. Download the app and get all the news on the move.